All right, guys, what is going on? Welcome to the live stream. Welcome to Wall Street Wednesday. I hope you guys are ready to learn something today. Hope you guys came ready to learn, man. It's been a learning week, hasn't it? You learned a lot yesterday and Monday and last week, right? Did you not? Did you not, chat? Today's focus, I would say, is not entirely low probability conditions, but I would say not the easiest of days, right? Getting some bullish, or excuse me, getting some bearish signatures at first, then getting some bullish signatures, and price not hitting levels of liquidity. So that's always fun when the market creates an engineered low or an engineered high and then goes the other direction. So anyway, no raid, no trade. Yeah. What's good? Adam, Julius, Sean, Robin, Ebeneth, Eric, Jorks, Mason, Scott. You can get chicks with this music, bruh. Look, man, I don't need that kind of stress in my life. Trading is enough. Running SMS is enough. Okay, my plate is full, big fella. My plate is full. Whenever, you know what I'm saying? If I want more drama in my life, then cool, but no, I'm good. What's good? H, Jonas, Yuso, Patch, Jordan, Les Savage, Torty, Akinola, Marvelous. So, as of right now, I'm leaning bullish. Although I wanted lower pricing. As of right now, earlier I was leaning bearish. As of right now, I'm leaning bullish. So let me walk you through this thought process here. What's good, Tang? So the higher time frame, right? To me, the higher time frame is bullish. Okay? To me, the higher time frame is bullish. But let's talk about it. Okay? Monday, beautiful up day. We discussed that yesterday. A lot of buy models everywhere. Tuesday, same thing, right? Awesome, like buy opportunities. Today, however, Wednesday gets a little bit tricky. Okay? Wednesday gets a little bit tricky. We end up hitting this Tuesday, November 4th, lack of wick, right? What's good, Jordan D? Right, so we end up doing that. And the regular trading hours, okay, this is where I wanted to be bearish this morning, and why I said I think we could trade lower to go higher. In the, again, regular trading hours, we stop just prior to 68.93 and a quarter. We traded lower, and then yesterday's MOC basically acts like a mitigation to go lower into Tuesday's gap. We rally a little bit, and then we trade further down into Tuesday's gap. We actually hit the halfway point. You can see that, right? You guys can see that right there. So Monday's closed to Tuesday's open. We trade right down to 50% of that. Then we rallied. And earlier, I actually had a question mark in here earlier because I was wanting to see how do we respond from this. And then we're back into Wednesday's gap. So it's not like I don't have confidence really in either direction. So if it was up to me, I would drag this all the way down below 30s. If it was me. If it was me, chat, I would run this bitch all the way down to the 30s. Now, ES by itself, okay, somewhat of a market maker sell model. Consolidation with some lows. We traded higher. Consolidation here, but we end up trading again with that gap. And then this to me is like, oh, the low risk short, first leg lower, and then a retracement, and then possible second leg to go lower. That's what I was looking for earlier. But the fact that we came all the way back up to Wednesday's gap may not be the case. May not be the case. And as of this mitigation and where we are at this moment, we're in between two different gaps. So that to me is an engineered high. So again, the higher time frame I'd like up here, but I figured the market would trade lower first to get trailing stops out before running it higher. That is really more so seen with NQ, right? So we got some labels here. The highs from November 4th and November 5th are up here. Those are still there. And that we've been talking about that, how that, like, to me, again, is the higher time frame. You know, that's where price wants to go. And again, Monday gave us nice buys. Yesterday gave us some nice buys as well. So you do have Tuesday's low left open, Monday's low left open as well, both in regular trading hours. So based on a recent low from Friday, if you measure that up to this high, like, yeah, this is a premium here. So again, it looks like it wants to sweep those lows and then run for those highs. Does that make sense? I'm going to get to that in a minute, Jordan, but I really don't have a lot for that. I don't know. I don't know what to do with Dow. I have no idea. So I haven't even updated my Dow Jones stocks list either in years. So that should tell you everything you need to know right there. I don't care about it all that much anymore. But anyway, you guys see what I'm talking about though, right? Like it would make sense. Like, oh, okay, yeah, come down for the lows and then run for the highs. That's what I was sort of anticipating earlier, which seems reasonable to me. Seems reasonable to me. The fact that we did not do that, well, if the market's not doing what I think it's going to do, then I'm out of sync with price delivery. You know what I mean? If it didn't run the lows, doesn't have to, it could still go higher. It's just, it's hard for me to trust that. It's hard for me to trust that. So ES is a lot closer to its buy side. And again, with the evidence that we've been presented with so far, with Tuesday's regular trading hours gap supporting price, there's a 1 minute mitigation here. That's why I said, as of now, it does seem bullish, but you've got NQ lows, and it's just hard to trust either way. Either way, it's hard to trust. And that's my point, Mason. Not willing to long without the lows taken. So, you know, here we are. Here we are. I want to say the dollar. Let's go take a look at that. The dollar, to me, somewhat supported lower indices if this was going to be a sweep on this internal low to then rally for those highs, right? So dollar going higher could be in alignment with indices going lower, but we have been under this low for the last couple hours, so that may not be the case. That may not be the case, chat. What's good, Omar? So, yeah, it has not been all that easy. We'll spend a little bit of time on Dow only because, you know, I keep saying, man, I've said this at least for the last 2 to 3 years. The indices used to be a lot more in sync. And then Dow one day just decided to not be that way anymore. And I know Friday, we may have talked about it a little bit, but the other day, either Monday or Tuesday, I told you to go look at that gap from back here and to look at the quadrants and stuff. I told you to study that. I did point out the buy side before we got there. I didn't point out these highs up here, though. I mean, we all saw them. We all seen them up there. But let's be honest. None of us, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Nobody said, hey, we're about to print 13 up candles in a row on the hourly chart. You know what I mean? So I don't know what to do with that. I don't know what to do with that. It's all-time highs, I think. Cleared out all of this. Nasty rally higher. I would be reluctant to buy this. I'd be reluctant to buy that. On top of that, on an intraday chart, it's still in regular trading hours, by the way. We do have equal lows here. So, again, not the easiest day, not the cleanest day that is out there. Know what I mean? Yeah. What do you guys think, chat? Let's do a vote. I want to see what you think. For the rest of today, are you guys bullish, bearish, or no opinion? Indices the rest of today, bullish, bearish, or no opinion? Some people on Twitter also bought Nasdaq thinking it was going to run because of Dow clearing all-time highs. Manipulation. What's good, Marshall? Listen, Nasdaq's the weakest index today. And it stopped and turned just before Tuesday's low. I just don't trust, I simply just don't trust that. If this does end up being the low of the day and we do run higher, hey, wonderful. I am not a part of that. So, wouldn't mean anything to me. I just, I wouldn't prefer that. I wouldn't prefer that. And then we're just back in this gap as well. Back near 50%. So, I would not touch this. Okay? On a demo account or a paper account, do whatever you want. Do whatever your heart desires. But I would not touch this. We're in the middle of the range today. We're in the middle of the range of the last couple of days in regular trading hours. This is just gross to me. I would not be willing to put risk on anything at the moment. You know what's going to happen? If I long, it's going for those lows. If I short, it's going to say, all right, I'll leave this open and run for the highs. That's how I feel, chat. That's how I feel about it. I'm long ES for the highs, though, so I'm biased. Well, to be fair, ES is stronger than NQ. And that's what I said a little bit earlier about like these highs. Let's zoom out a little bit and I'll show you what I'm talking about. Again, still in regular trading hours, the high of Monday the 3rd and the high of the PM session of Monday the 3rd. Like those two small highs right there are at 68.93 and a quarter. So when we reset the chart, that's what that level is up here, buy side in regular trading hours. And that right there, we stopped just shy of that. I think that's crazy. I think that's an engineered high. So I don't trust it. Where are you long at, Cameron? Where are you long? To be fair, there was some nice stuff in here. I mean, there's always going to be really good price delivery on both sides, okay? But not every move is sustained. You know what I'm saying? Like you could be in on this mitigation. Market makes a new high and you're thinking, oh yeah, that's bullish. And then this just trades lower, right? Or maybe you're in from down here and the market does happen to go for those lows, then it erases all of that. You know what I mean? But you know, one thing I can tell you about this is I do not like the time that it's spent in there. You know what I mean? We really trade through it at like 10:57 and we trade back into it at 10:58. We spend a few minutes there. We get into it again at 11:10 and then we get into it again at 11:18. Like, my gosh, that is a lot. We finally get through a new high. And then this mitigation here does trade to the lower end. And it's just been very slow to go higher. If I was long, I would be probably irritated, to be fair. Probably irritated. That's my guess. 68, 66. 68, 66.5. Oh, this. That right there. That's not bad. Yeah, that's not bad at all. It's prior to the mitigation as well. That was probably scary if you watched it. Like if you're in from that and you watched it come all the way back to 68.5. That may or may not give somebody sweaty hands. But again, I think I covered this yesterday. You can reasonably anticipate a retracement when you see stuff like the manipulation, right? What manipulates typically mitigates. So it shouldn't be that big of a deal. So if your stop is in profit, that may have gotten you out. If your stop is at break even, then probably not. But that's not terrible. That is not terrible. And let's go to electronic for a second. If this does end up being a buy model, then it really should start to take off. Consolidation up here, somewhat low resistance highs, triple low or 1 2 3 formation into Tuesday's gap. And if that's the manipulation and like this is the low risk buy, then we should, if it's gonna trade higher, it should take off. It shouldn't keep just doing what it's doing. It's just, it's not doing anything here. Does that make sense, Cameron? Like, you want to trade during expansion, right? If it's not seeing expansion, then it may not be that, you know? Today's one of those days that I think people expend a lot of mental capital on. That's what I think. And yeah, Cameron. So that's more of like a time-based stop, you know? If you're gonna rip higher, then rip. But if you're not, you know, then it's like, okay, we're either gonna jam the stop up or at least maybe 1 or 2 points, you know, something on the day, rather than just a strict break even. But yeah, this just, again, it's not the easiest day. If I was in control of this market, I'm gonna stick to what I said earlier. If it was me, if I had my hand in the cookie jar, I would take this all the way down to the 30s, the 20s, really. That's what I would do. Rip it lower. These internal highs, right? Rip that to get any trailing stops. Anybody who's short, get them out, take the other side of that, and then go, okay, now the carnage insinuates. Now the real move begins, and then just rip that all the way down there. Silver's crazy the last couple days. Well, Eric, you remember what I said, right? About gold? Once we actually left ping-ponging in between those two imbalances, that's what happens. The markets go from consolidation to expansion. They go from large ranges to small ranges. After, let's go to gold for a second. After small ranges come big ranges, right? That's reasonable to anticipate. You've known about that for a long time. We were stuck in here for like 2 weeks or so. Quick math. Once we leave it, right, we go from small ranges to large ranges. And that gap I mentioned yesterday and in the market review, right? Prices respecting that, right? See that? It came down in there twice. Then respected the upper half. And then today, it took off. That's reasonable. I didn't have a bias. I didn't say anything about it. I definitely did not trade it. But, you know, it's still a good study. And silver outperforming on the upside. Oh, it's up 5%. You were right. It looks like it's getting ready to print all-time highs. That's not bad. We are at the end of the year too. We're nearing the end of the year. So if seasonality is going to be in alignment, then we're not done. And I would not try to pick a high in this. We could probably go to the 60s by the end of year, maybe January. We could probably get the 60s. Who knows? There you go, Eric. You're welcome. There you go. I would remain bullish on this. I'm not going to be one of those Twitter goobers that try to pick the high. There's a reason they keep trying to do it, and they keep failing. So just don't do that. But yeah, that's it. That is it, my friends. We haven't done anything here. You know what? This is starting to look like this is just ugly. But that mitigation here, it's looking like an inversion, but it's just so trash. It trades way beyond that, well beyond that. It's just, I'm glad I'm not in anything, because this is trash to me. May not be trash to you guys, but this is trash to me. So let's see what you guys voted on. 40 votes, 55. So we got the majority bullish. 17% said bearish. 28% said no opinion. Yeah. Reasonable vote outcome. What other questions you guys got while we watch the indices do nothing? When it comes to gold, I see it tends to move during Asia. How would we apply time during the different session? Macros are still going to be the same. But I haven't traded Asia in a long time. But I would still use session open. Probably the first presentation. Regular trading hours and electronic trading hours. I would trade in the direction of opposing liquidity. One thing I will tell you about gold is, well, I don't really watch it as much as indices, so it's kind of hard to say, but I think market maker models are not as easily spotted on gold than other assets. Like, I look at gold and I really don't see a lot of market maker models. So that's what I think. I did a video a long time ago when I was still in the MLM industry, and it was about, there's a video on if I only had to trade gold or metals. Like, if I only had to trade metals, like, this is what I would do. And a big part of that was relative strength analysis and liquidity. So that's what I'd do, Adam. You know? But I try to be done by that time. Because by that time, you know, it's evening and I want to do other stuff. Play video games or read or, I don't know, anything but trade. You know? I don't want to be trading at that time. I want to be done by then. I want to be done by then. All right. Well, we'll go ahead and end it here if you guys don't have any more questions, because I really don't have anything else for you. I really don't. 68.93 and a quarter, and today's equities open high, I think is at this point likely to be a target. Okay. I wanted lower pricing. Doesn't look like it. NQ, same thing. I wanted lower pricing. I wanted to see if we could get Tuesday's low and Monday's low swept before going higher, and the market's just not doing that. You know what I mean? It's just not doing that. We're stuck inside the range. This is for me, this is the perfect day to say, okay, this is not it. Let me go do something else. Log out, go read a book, go get groceries, whatever. this is a day that's really good for that to me. So that's probably what I'm going to do. So with that, we'll cut it here. Y'all be good, be blessed. The market review for Thursday will be tomorrow. The next live stream is going to be Friday the 14th. All right, so go be productive, go journal, go read, watch, let's say, other content. You know, if there's videos you haven't seen, if there's market reviews you haven't seen, go catch up on those, because I feel like that's a much better use of your time today than to be here another 30 minutes when I just don't have anything for you. Okay, so I don't want to waste your time. Go be productive. All right, I'll see you guys on Friday.